Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton,
I'm Bob Scarborough.
and we are
Uh,
the FAIRtax Guys with Fat Albert and your world famous scrolling banner there.
so, buddy, it's one of the greatest inventions for the fair tax because they're not very expensive. You can buy two or three at a time, have them shipped in from fairtaxstore.org, and go make it happen. Go show people, stand on the street corner, go to a baseball game until the usher comes down and tells you please leave. Uh, you know, sometimes that happens when you have some sort of an agenda when you go to a public event like that. But
Oh, well, take them to a candidate's town hall now. We're not quite hot and heavy into the midterm election season, although I would contend that the midterm election season started the day after the presidential election was held last November, because it's always election season because the candidates are always trying to raise money because it takes so much of it to get reelected, which is why the lobbyists have such a tremendous influence over policy, especially tax policy. We'll take a look here at Congress.gov in just a second and see what the Congress critters are up to the tax code. But it is it's always election season. Is always a good time to tell folks, hey, we want you to vote for the fair tax. If you ever see your elected representatives or talk to them, or especially if you go to any of their public meetings, carry some of those scrolling banners with you and have at it.
absolutely. You know what we didn't get to do last week while Jim Bennett was on?
I know we didn't get to look at Congress.gov, my favorite portion of the program every week. And we'll say if you didn't catch last week's program, it's a pretty informative thing that Jim Bennett had. The idea of the Pope getting a tax bill from the Internal Revenue Service is one that just boggles the mind. So you need to check that out in our YouTube archive. It's under the live section. We've also got an archive up at rumble.com if you'll check that out as well. But anyhow, we got to get back into Congress.gov for this week. And I had started keeping notes from week to week now as to what it was. And the last time we recorded, when you go to Congress.gov, you put the words Internal Revenue Code in quotes at the search bar at the top of the page, select legislation in the current Congress, and hit go. Last time we recorded a couple of weeks ago, 712 hits. Just a few minutes ago, when I looked again, 778 hits. So in actually a little less than 2 weeks, we're recording a tick early this week, but 66 new proposals to change the tax code have hit the House and the Senate floor in just the past couple of weeks. And it's just, sometimes it's funny and sometimes it's maddening what the Congress critters are trying to do to the tax codes. But we will continue to shine the light of truth on them here at the FAIRtax Power Radio and let you know what they're up to. And what they are up to at the top of the list today is H.R. 3519 from Representative Burgess Owens of Utah to amend the Internal Revenue Code to allow a credit against tax for charitable donations to nonprofit organizations providing education scholarships to qualified elementary and secondary students. Of course, under tax law now, if you make a charitable donation to a 501c3, a tax-exempt organization, you get a deduction, meaning you get to deduct the amount that you gave from your total income, and it means you would have a tax liability on a smaller income, and of course a smaller tax liability as a result. But this is an actual credit against tax, where for every dollar you give to the charitable organization, you get to deduct $1 of tax that you owe. That is against a lot more valuable than just a deduction. And again, they're picking winners and losers. Some charitable donations, apparently Representative Owens wants to give you a tax credit if you contribute to a nonprofit organization providing education scholarships to qualified elementary and secondary students. Otherwise, you just get a tax deduction. And the tax code is just full of these. Some people get a break and others don't. And you get a break for donating to this organization. You get a bigger break if you donate to this organization. It's crazy. It needs to go away. It needs to be pulled out by the roots and replaced by the fair tax.
Absolutely. And we say that all the time. And the reason we go to Congress.gov every week is to exemplify just how much takes place within the tax code that keeps the complexity high. and makes doing our normal business and reporting of income just as complicated as about anything else on the planet.
Absolutely. All right. I should mention also there's a companion bill in the Senate that does the same thing. That's S 1813. If you want to go look that up. But moving right along here on FairTax Power Radio, our next contestant in the Congress.gov segment is HR 3515. This is from Representative Jennifer Kiggins of Virginia to amend the Internal Revenue Code to exclude military bonuses from gross income. We've talked about this before. If you're going to tax income, you have to be able to define income, and the tax code is constantly shifting as to what counts as income and what does not count as income for tax purposes. And if a Representative Kiggins gets her way, then if you are in the military and you earn a bonus, then that does not count for gross income. That means you get to keep that one tax free. And again, it's just crazy. Some income counts, most income counts, but some of it doesn't. And it's, again, that's just complexity. It's unfair. It needs to go away in favor of the fair tax.
Absolutely, without a doubt. And you have to understand that the people in Washington D.C. That we elect to go up there and represent us are being bombarded on a daily basis by lobbyists who need some help in getting things done for their clients. And our representatives are the ones who end up taking a dollar here and a dollar there to build a nice little war chest for their next reelection campaign.
That's crazy. All right, let's go on to HR 3475. This is from Representative Brian Fitzpatrick of Pennsylvania to amend the Internal Revenue Code to establish, oh, would you believe it, another tax credit, a new first-time home buyer credit, and to establish the starter home construction credit. More credits into the tax code. I can guarantee you there's a lobbyist behind this one.
Sure. Absolutely. And that's the thing, as Bob Paxton always says, they're picking winners and losers inside the tax code, especially with credits like that. And they're working hard. It, needs to be simple, fair, and efficient. And that's what the fair tax does, for sure.
Oh, mercy. Credit, deductions, loopholes, all that stuff is just non-existent in HR 25. You don't get any of that stuff. You don't pay taxes on your basic necessities thanks to the prebate. Beyond that, if you make retail purchases of new goods or services, you pay the fair tax. End of story. No credits, no deductions, no loopholes, no nothing. You treat everybody the same. We need to get that. We need to get that now. HR 3475 is our next contestant. Oh, wait a minute. That was the last one. This is next one here is HR 3469. This is from here in Florida, Greg Stubbe, to amend the Internal Revenue Code to reinstate the deduction for personal casualty losses as in effect prior to the enactment of Public Law 115-97. Again, there was a deduction for personal casualty losses. A previous Congress took it away. This one wants to put it back. Again, we talk about this week after week after week on FairTax Power Radio as to how incredibly unstable the tax code is, because depending on which party has the majority, you'll see things being reinstated, you'll see things being taken away, you'll see things being modified. It's just never the same from one year to the next. And that is a real tough environment to try to do business planning in. If you don't know what the tax code is going to look like 5 years from now, it's hard to develop a 5-year plan to bring your business forward. And again, this winners and losers, instability, shifting sand, we use that term every week just about. And there's another example of it, HR 3469 from Greg Stubbe here in Florida. Reinstate a deduction that was taken away earlier. And I guarantee if this bill passes, there will be a subsequent Congress down the line that wants to take it away again or maybe cut it down or whatever. They're always messing with the tax code. That stopped under the fair tax. It needs to right away.
I think that's, again, just stuff that just flies in and we don't know half of it. If we didn't spend time like we do, like you do on on Congress.gov, you would have no idea all the shenanigans that are taking place in the tax code.
I should mention there's a Senate companion bill to this one, to HR 3469 as well, that wants to do the reinstate the deduction. That's a S 1773 if you want to keep there at. And I think that is about all of the fun and frivolity I can handle for 1 week here, looking at what the Congress critters are doing to the tax code. We'll check it again here in a couple of weeks. And I guarantee you there'll probably be another 60 or 70 changes that have been proposed. But it's I did notice we didn't really have time to get into it. Remember last year we talked about the provision of the tax code trying to encourage federal agencies to use retreaded truck tires. That one's back, and whatever. It's just nuts. Let's go on before we before we run out of time here.
I'm always concerned because I drive on a highway that's used by over the road truckers. I'd hate to think that a retread or a secondary tire would explode or fly off while I'm going by the truck.
Well, I have been behind a truck twice actually, or that actually happened. Once on Highway 314 on the way to work in Palatka one day, and then again on the I-75 headed to Tampa one time. And man, you sit there. I mean, it's like a stick of dynamite goes off under that trailer, and you're just dodging shrapnel and hoping to goodness that you can get through it all. But anyway, let's go on with Fair Tax Power Radio. There is a lot of talk here in the news these days about the big, beautiful bill that the president is trying to get through Congress. And by the time this streams, he may have gotten it because there's supposed to be a vote on it here fairly soon. But you did a little research into that thing. And there is a good bit in this big, beautiful bill that has to do with taxation. Unfortunately, getting rid of the income tax code, as the president has said he would like to do one of these days, is not part of this big, beautiful bill. What's in there?
Well, it is tax reform, but again, we talk about tax reform all the time, and every so often we get Congress to come up with something. I think that the biggest thing about what we're looking at, the one big beautiful bill, tax reform 2025, which by the time this airs will have gone through the House. It's already on the floor as of today. So anyway, this bill brings a number of things, business provisions, for example, the definition of adjusted tax income under a particular section is based on the EBITDA, which is favorable for taxpayers that use that under current law for tax years 25 to 28. Nothing there seems to be permanent. Now, the taxes that were reduced during President Trump's first term are being proposed to make them permanent.
Also, it's amazing how many bills we see in Congress.gov where we want to make this permanent. Well, why didn't you make it permanent to begin with? Well, we really can't do that. Why not? Well, we just can't. Again, instability in the tax code is insane. It needs to go away in favor of the fair tax.
The individual provisions are standard deductions that are being proposed for tax years 25 to 2028. The standard deduction is increased to $26,000 for joint filers from $24,000, and to $19,500 for head of household filers from $18,000, and to $13,000 for all other filers from $12,000. The personal exemption is repealed permanently. Itemized deduction limits are allowed and made permanent with the PEAS rule, which itemized deductions is replaced by a rule that reduces itemized deductions by, get this, 2/37 of the lesser of one, the amount of itemized deductions, and two, the amount of taxable income to the taxpayer for the taxable year that exceeds the dollar amount at which the 37% bracket begins with respect to such taxpayer. I could go
Oh,
on. But I think
you, you're you're making my eyes glaze over. But one thing you said just a second ago that set off a bell in the back of my head. The definition of permanent, when you're talking about the tax code, is until a future Congress comes along and changes it.
very true. One of the things that, and since we're, you know, what we're about is making sure that people understand the complexities of the tax code enough to where they start looking at the fair tax as the logical replacement. But what was holding up the bill coming out of committee a week back in the middle of May were the state and local tax deduction caps. A lot of
Yeah,
the a lot of the folks were looking at their constituents saying, "Well, we need to increase the cap so they can take more deductions for salt
yeah.
deduction."
It used to be that taxes you paid to a state and local entity were completely deductible on your income tax or federal income tax return without limit. And so, if you lived in a high tax state like Illinois or New York or California, I mean, you could be easily hit with a five-figure tax bill at the state level, and you could even more than that maybe. But then came along the Tax Cuts and Judgments. They put a cap on that, and you should have heard the squealing like a stuck pig when these people in these high tax states could no longer deduct every dollar that they paid in state and local taxes on their federal returns. Again, this is just incredible complexity that does not need to exist. None of this takes place under the fair tax. The fair tax doesn't care where you make your money, how you make your money, what you spend your money on, how much state and local tax you pay, how much you give to charity, how much you spend in medical costs, how much you spend for daycare. None of that is any of the government's business under the fair tax. And I think that this big, beautiful bill needs to just incorporate HR 25 right into it and get rid of all this other garbage that they're trying to work on right now. Sorry, okay, I'll come off the soapbox now and let you continue.
The debate over all of these different provisions of the bill. You heard during Trump's campaign, overtime compensation deduction, uh, the deduction for tips, for example, deductions for car loan interest, expansion of child care credits, family and medical leave credits being expanded. Uh, Scholarship granting tax credits.
Yeah.
All of these things can be accomplished through the fair tax on consumption. You don't worry about what you write down over in this column and put on a form that goes in with your 1040. You end up taking all of your tax bill is paid when you buy something at the cash register. But just as because this is something that I think tipped the scale and brought Trump his second term in office, the tips deductions. Taxpayers earning 160,000 or less, for example, in 2025 and adjusted in the future for inflation, are permitted a deduction for cash tips from an occupation that traditionally and customarily receive tips. To the extent the gross receipts of the taxpayer from the trade or business of receiving the tips exceed the sum of the cost of goods sold allowable to the receipts and other expenses, losses, or deductions properly allowable to those receipts. The deduction is allowed for 2025 tax year through the 2028 tax year. So what does that do? That gets you just into the next session of Congress, and then somebody.
Uh,
But I
well,
thought,
we went out to dinner after church last Sunday, and we were talking to our server about that, and she said no tax on tips. She just kind of rolled her eyes and walked away. She didn't think it was going to happen. So, well, if we had the fair tax, there would be no tax on any income of any kind. That caught her attention. And I was able to talk to her a little bit about that. And so that's a good idea. No tax on tips is a good idea. No tax on overtime is a good idea. No tax on Social Security benefits is a good idea. But no tax on any income of any kind from any source is a much better idea. And we need to convince the president of that and get him behind the fair tax.
well, you would think you hear no tax on tips, and you think that's going to, be a pretty easy thing to do. I made this amount of money in tips. I don't have to claim it as my income. It's cash in my pocket. Um, but the verbiage within the bill, which is inconsequential to its passing necessarily, or to the fact that it's only going to be for 3 years, but you have to earn $160,000 or less, for example, in the year that we're currently in. So these things are not ever promises made in Washington, D.C., or campaigns are are only as good as the 800 some odd people that might have influence on the congressman or the senator. But there's others in here that are kind of interesting. Once the one that I thought was interesting, the qualified bicycle commuting reimbursements are
Well,
now
bicycle commuting reimbursements. Did I hear that right? If you ride your bicycle to work, you get a reimbursement.
qualified bicycle commuting reimbursements are now taxable.
Oh, mercy.
So
All right. Does that include electric bicycles? We had some Congress bills dealing with electric bicycles at one time, if I remember right. You're looking to see,
it's
huh?
all going in. Reimbursements of bicycle commuting expenses are subject to income tax. Well, before the TCJA, the reimbursements were not taxable. So now they are. But these are all things, I mean, you're going to rob Peter to pay Paul, because at the end of the day, you want to try to make sure that there's still enough money coming in. And we know in history that when you have a tax cut, it increases activity on what was most recently taxed, like the use of money. And so we end up, with an economy that booms for decades, if not longer. Uh, Child tax credits are made permanent, and the creation of MAGA accounts, money account for growth advancement, MAGA accounts, or tax exempt trust accounts that they're proposing to create for U.S. citizens under age 18. The funds from the accounts can be used for qualified expenses of the beneficiary, such as higher education and first time home purchases. The House bill provides a one time $1,000 federal credit per child born between 2025 and 28, which will be deposited directly into the child's MAGA account. Can you believe that?
Wait, are you telling me that the government is going to give every kid under a certain age $1,000? Am I hearing that right?
A credit. It'll be a credit because the cash won't actually go into any magical account anywhere, but you'll get a credit that will show up on some line somewhere in the U.S. Treasury. So, I mean, we laugh and we look at all these things, and I have to give credit for this digested form of information about the bill from ProScour. They do tax talks within their organization, and this one came out on May 19th.
Yeah, well,
So
the bill is over 1,000 pages long, so heaven knows what they've stuffed into that thing.
I'd hate, and nothing's changed in terms of how Washington operates. So, the Department of Government Efficiency lifted some stones up and uncovered, some bugs crawling around under there, dirt mites and worms and things like that. But beyond that, I mean, it's still business as usual on Capitol Hill.
Well, let's get business as usual out of the way and implement the fair tax as quickly as we can. Because I say, remember when we talked to Steve Hayes at the beginning of the year, he says we basically got 2 years to get this done. And
You're already getting ready to be halfway through here pretty soon, the first year. And you know that the end of this year is going to be re-election campaigns are going to be cranking up for 26, and you're behind the eight ball even when you start. Again, we talk about ripping the tax code out by the roots. All this reform business, and this is just my opinion, as a thinking, breathing human being in the land of the free and the home of the brave. There's no such thing as a way to reform the tax code. It has to be eliminate the Internal Revenue Service, enact the fair tax, which is a tax on consumption, and then that's it. And then get rid of the 16th Amendment in a companion device.
Indeed. We got about 3 minutes left. We got time for one more little good point if you want to bring up one more.
Well, I'm looking for something that's unique. I mean, the pieces, the low hanging fruit would be like no tax on Social Security, no tax on tips. But we already see that those are things that are limited and have strings attached. It's not going to be a straightforward deal. From the Tax Foundation, this was an article from as we were recording this on the 21st of May. There are good, bad, and ugly things about the bill. I'll just go through a couple of them and keep me on time. The bill makes some smart tax cuts and revenue increases. Most of the good tax policy aligns with Tax Foundation's principle of stability. It permanently extends the rates and brackets of the 2017 individual tax cuts. That's the best thing about it. Lawmakers also provide a permanently higher threshold for expensing certain equipment for smaller businesses and investments accounts. That's good. If it takes 2 or 3 steps to get away. Moving away from some of the permanent changes, the bill makes improvements to cost recovery for U.S. businesses relative to current law from 25 to 2029. Again, health insurance premium tax credits projected to cost about $1 trillion over the next decade are pared back by 20% by tightening eligibility rules and reducing improper payments. The bad part that they say, one of the top things that they say in Tax Foundation's report here, rather than make the most pro-growth features permanent, the bill spends far too much money on political gimmicks and carve-outs. Surprise, surprise, surprise.
Yeah, surprise, surprise with that one. Mercy.
Resulting in a package that provides a modest boost to the economy, but at a huge fiscal cost. It introduces tax exemptions for overtime pay and tips, as well as a deduction for auto loan interest and a new additional standard deduction available for all seniors, all of which violate basic tax principles of treating taxpayers equally. What does that sound like?
That sounds like we need the fair tax to treat everybody equally, and you are out of time. We have got to wrap this up for this week on FAIRtax Power Radio. Oh, you're going to wave by, just walk out the door behind you there, aren't you? Okay, well, we'll go ahead and do this and remind everyone that we will be back same time, same channel next week with more FAIRtax Power Radio. Hope you will join us. Hope you will share the videos. That helps us a good bit. And until we meet again, I'm Bob Paxton.
I'm Bob Scarborough.
We're the FAIRtax Guys, providing you the fair tax is the only truly fair tax. And once you understand it,
you'll demand it.
Roll Tide.
So tell me, how could I pay less taxes?
Less?
Yeah, I'm trying to get ahead, so how can I pay less?
Well, I suppose you could pay less taxes by earning less money, or you could give to charity.
How is that going to help?
Actually, I'm not supposed to tell you this, but if you know the right people, okay, or if you have a really good lawyer, you can usually get around the big ones.
If I may, under the fair tax, to pay less taxes, you would simply consume less. You would control how much you pay and when you pay your taxes simply by choosing what you purchase and when you purchase something.
So I could stay focused and get ahead.
Exactly.